Hey guys, what's up? This is Francisco with Valareso Capital, and today I'm gonna go through a quick video for my education section of my YouTube channel. And I'm gonna go through one of my favorite indicators that I use, and one indicator that has helped me develop an entire system for managing my risk, depending on the average true range volatility measured as a percentage, so I can compare a stock versus a different stock price at different levels. So first of all, let's start with what is the indicator. The indicator is the ATRP, which stands for average true range percentage. And the indicator that I use it on TradingView, and you can find it under Miller RH username, and you can see that he published the indicator, and is a free tool to use. So make sure to check it out. I find it really useful for myself, and as I'm going to explain through this video, I'm going to explain how I have developed an entire system to manage my risk and to position myself correctly depending on the average true range percentage of the volatility of each stock. So first of all, let's start with some of the things that I have here on my chart. As you can see, I have two different indicators. One is the simple ATR, which is the average true range, and the other one is the one we're going to talk about, which is the ATRP. So, what is the let's start with what is the ATR that I have here on my screen, and let's go through some of the notes that I have here for you. As you can see, the ATR measures volatility. However, you cannot compare a stock versus another stock because the ATR value will be different depending on the price of the instrument. It will be different depending on the price of each stock. So here in my example right here, I have Aapl, and as you can see, Aapl has an ATR of 4.20. That means that Aapl on average each day from its open to its close moves an average of $4.20. If we go to a different stock which is priced differently, let's go through another example. Let's go, for example, with Python. We can see that Python has an average to range of 335. That means that Python moves on average $3.35. Now let's go through a different stock that is priced entirely different. Let's go through Amazon, and we can see that the ATR in Amazon is 118.75. So that's actually right. It's pretty good information. We know what is the volatility in the stock, but how are we going to compare Amazon versus Apple, or how are we going to compare Amazon versus Python? Or how are we going to compare Amazon versus a firm that has an ATR of $7.88? How do we position ourselves correctly so that we have the same amount of risk on play on these different instruments, right? So that's basically where the ATRP comes into the picture. Now let's go through some of the notes that I have for you in ATRP. So ATRP, which we already mentioned, is the average true range percentage, expresses the average true range ATR indicator as a percentage of the bar's closing price. And as you can see right here, I have the formula, which is the average true range divided by the closing price multiplied it by 100 to make it a percentage. As we mentioned, the ATRP is also used to measure volatility. However, the ATRP allows the stocks to be compared. Now we go into the takeaways. The ATR measures the volatility as an absolute value. Basically, lower price stocks will have a lower ATR value than higher price stock. We saw that comparing Amazon versus Python or versus Apple or versus a firm, right? But the ATRP displays the indicator as a percentage, and this allows us to compare stocks trading at different prices per share to be compared, right? This allows us to find a common average of percentage that moves in that stock. So now let's go back to the example in a firm, right? We can see that a firm is a pretty volatile stock, right? Here, let me get let me take these out of the way since we're not going to be talking about ATR, but we're going to focus solely on ATRP. We can see that we have two lines here. I have a black line and I have a green line. The green line is going to be the average, and the black line is going to be kind of the current one that we have in the stock. And we can see we're just going to focus on the average, right? The average the ATRP in percentage is 16.34%. That means that a firm is going to move on average each day 16.34%. Now let's go back to Amazon or Apple, right? Let's go first to Amazon. We can see that the ATRP in Amazon is actually 3.77. That means that Amazon on average moves 3.77%. So now we know what is the volatility, the actual volatility on Amazon independent from its price. Now let's move into AAPL, which is Apple. Apple moves 2.57% on average each day. So now we have an actual, right now we have an actual clue, or we have an actual idea of what is the actual volatility in the stock. Let's go to Microsoft to have a little more examples, right? We can see that the Microsoft, the average is somewhere around 3%. So now how does this information help us? These actually help us to position size in a way that we can measure how much we're going to risk and how much we're expecting to gain, right? Because we cannot place ourselves, right? We cannot put the same amount of risk in Microsoft, which moves 3% on average, as a firm, which moves 16.34% in average. If we place a stop, let's say we place a stop on Microsoft for 5%, average true range percentage is 3%. Maybe we don't get a stop on one day, but if we place the same 5% stop on a firm, we're most likely going to get a stop pretty quickly since this stock moves on average each day 16%. So now that we know this, how do we position ourselves? And now let's go into one Excel position size table that I'm going to show you here. Let's go with a simple account of $100,000 to make the math easy, right? So here we can see, and let me change the color to make it a little bit more, to make it stand a little bit more, right? We can see here, right, on an account of $100,000, we can see that here we have this will be the average, this percentage will be the percentage of your account, right? The account size. And here I have the ATRP measure on what is the average true range percentage move in each of the stocks. And here will be in the top column the percentage size of your account. And this is basically just a really easy table to use. And how this is going to help you, you're going to find a common denominator of how much you're going to risk per trade. So for example, let's go to the example in Amazon, or let's go to example in Microsoft. Microsoft moves somewhere around 3%. And let's say that you want to risk only 1% of your account in each trade. That means that you're going to risk only $1,000 on each of your trades. So then you say, okay, if Microsoft moves around 3% each day, I'm not going to use that as my stop. That means that I can risk somewhere around 35 or 30% of my account in that trade. And of course, if you don't feel comfortable risking that much, you can look for stocks that have an ATRP, a higher ATRP, so that you can risk less percent of your account in each of your trades. Let's use the example of Python, right? And if we go back to the chart to remember what the ATRP in Python is, let's say that we want to risk $1,000 in Python. We see that Python, the ATRP is 11%. We go back to our table and we can see that I don't have 11% here, but I have 10%. So let's work with that. We can say that on average, we want to risk only $10,000 in Python to only risk $1,000. So that means that for a trade to have the same amount of risk on Python and the same amount of risk, let's say on Microsoft, in Python, I only want to risk 10% of my account since it moves on average 10%. And then on Microsoft, I'm going to be able to take a bigger position, right? Perhaps I'm going to be able to go with let me just take this out. I'm probably going to go back with, uh, perhaps I'm going to go with a position size of 25% or 30% because I know that the average true rate percentage in Microsoft is only 3%. And in order for me to get that move and lose those $1,000, I'm gonna need a higher position, and that's gonna help me manage my risk to the downside and also to the upside, right? So basically, in summary, this system is based on risking approximately $900, and this formula is basically summing all of your risks and then dividing it by 10. that give us $900, and then you're gonna risk those $900 per trade, and then you're gonna look for setups that give you a 2 to 1 risk reward, or even a 3 to 1 risk reward. So you're gonna risk on average $900 to make $1,800 or $2,700, and that will depend on your setup. But the purpose of this video is to understand that just by looking at the ATRP, you can create a solid plan so that you understand what is going to be your position size, how to position size on each stocks based on its average true rate percentage, because you cannot risk the same amount of money on a stock like a firm that moves 16% each day that you're going to risk on Microsoft, which moves 3%, right? You don't want to risk the same amount of money on Python that you want to risk on Microsoft, because if you risk that 30% on Python and Python stops you out, you're gonna lose somewhere around $3,000, and that is not gonna be an acceptable risk based on the system, right? So I hope that was helpful, guys. I was trying to make this a little bit of a short video for you guys to understand. Just let me know if you have any questions. I highly recommend checking the ATRP. It has helped me a lot to manage my positions, to trade different securities, right? You don't want to have a huge winner on Microsoft in which it moves 6% and you make $1,800, and then risk it all on let's say risk it all on a cannabis name like I don't know, Tilray, which the ATRP is 8%, and then all of a sudden Tilray makes an average move, and then you lose that win that you make on Microsoft. So check it out. I think it's a really useful thing, and it will help you a lot managing risk, and most importantly, understanding how to position size yourself on a stock based on its average true range percentage. So thank you so much, guys, for watching. Let me know if you find this video helpful. If you have any questions about how I created the table, if you have any questions about the indicator, just let me know about it. I just want to remind yourself that this is a free indicator that you can find in TradingView, and I have found it really, really helpful for myself. So thank you so much, guys, for watching. I hope you have a good one. Make sure to follow me on Twitter. Uh, my Twitter account is at Valareso Capital, and in my account, in my page, I do a lot of analysis of the market. I post a lot of setups, and I also do some recommendations on psychology and all that kind of fun stuff. So make sure to give me a follow on Twitter, and make sure, guys, to like and subscribe. I will continue to make more of these videos. My goal is to help as many traders, as many new traders as I can, and of course to share ideas with any veterans traders who are out there, and just connect and have some fun. So thank you so much, guys, for watching. Make sure to like and subscribe, and I'll see you guys on future videos. Thank you so much. Cheers.